a deal in Greece, stability in China, and a stock market rally here on Wall Street. Investors breathed a sigh of relief when they woke up this morning to word that Greece and its creditors have reached a deal on a fresh bailout. Now, this deal takes the worst-case scenario off the table and eases the fear that the country will leave the currency union in Europe in the near term. That was enough to allow investors in Europe and the U.S. to vote with their wallets and send stocks higher. By the close, the Dow Jones Industrial Average rose 217 points to finish at 17,977. NASDAQ gained 73. The S&P 500 added 23 points.
But despite the deal between Greece and its creditors, there are still a number of uncertainties surrounding the country's long-term financial fate. And this deal came at a very high price, including tough conditions that no one is sure the country's leaders can actually fulfill. Michelle Caruso-Cabrera reports tonight from Athens.
Greece is still in the Eurozone, but just barely. After an all-night negotiating session in Brussels, the country emerged with an even worse deal than the one Greek voters rejected a little more than a week ago. Pension reform, which will force Greeks to retire later and contribute more to their retirement. Higher sales taxes on many products. Reforms to the labor markets and product markets. And a brand new requirement. Greece must transfer ownership of $50 billion worth of state assets to an independent fund. Those assets will be sold over time to help recapitalize Greece's creaking banks and to pay back some of what Greece owes to the rest of Europe. Greek Prime Minister Alexis Tsipras told reporters the deal will persuade markets that Grexit is no longer an option. But before Greece gets any new money, Tsipras and the Greek parliament must pass and implement pension and tax reform in the next 48 hours. Only then will finance ministers meet to begin the process of creating a full bailout program. And the situation in Greece is dire. The Eurozone estimates the country will need more than 80 billion euros in support over the next 3 years. That's on top of the 240 billion they've already been awarded in 2 previous bailouts. Hence why other leaders want proof of performance first.
A lot of that trust was lost and it had to be rebuilt. It still has to be rebuilt.
The most immediate question on the minds of Greek citizens and businesses: when can the banks reopen? The answer? Likely not until they get a fresh round of investment, billions of euros worth, to recapitalize them. That's likely not going to happen until the deal is finalized. And the Dutch finance minister said today that's going to take at least a month. Greece still has a very tough road ahead. For Nightly Business Report, Michelle Caruso-Cabrera, Athens.